Are you ready to unlock key information about your investments? We're going to dive into how to set up rental property expense accounts and how to track expenses by property. So when you run your profit and loss statement, you'll know the profitability of each investment. The first step is to turn on classes. You'll need either QuickBooks Online Plus or Advanced to access this feature. Click on the gear icon and then Company Settings. And over on the left-hand side, we have Advanced. And then we're going to go down to categories. We can see that track classes is currently off. So we'll click the pencil icon and then slide this over to green. So classes is now turned on, and we're going to check the box for warn me when a transaction isn't assigned a class. This is a helpful reminder. And we're also going to ensure that under assigned classes, one to each row in transaction is selected, and then click Save. And done. The second step is to add a class for each property. So we'll click on the gear icon and then All Lists and then Classes. And to add a new class, we click on the New button and then type in the name of the class and then click Save. In our case, we already created two classes for the property. So we have 555 Coconut Ave and 777 Peach Boulevard. We're going to add expense accounts under cost of goods sold, or COGS. This means expenses that are directly associated with how you make money, in this case, how you make rental income. So what type of expenses does that include? Let's go over the list with some examples. Advertising, purchasing for rent signs to display around the community. Auto and travel, going to the property for repairs and monthly inspections. Cleaning, hiring a professional cleaning service to prepare the unit for the next tenant. Property insurance, this protects against damage or loss to the property. Property tax, this is calculated based on the property's value. Repairs and maintenance, fixing a leaky faucet or painting walls. Legal and professional services, hiring a real estate attorney to draft a lease. And utilities such as gas, electricity, water, and sewer. The third step is to create expense accounts. We'll start by creating our main expense account called Cost of Goods Sold. Then we'll add a sub-account called Repairs and Maintenance. We'll head over to Transactions and then Chart of Accounts. And we'll start by creating our Cost of Goods Sold account. Cost of Goods Sold. And the account type will be Cost of Goods Sold. And the detail type, we'll use Other Costs of Services, and then we'll click Save and New. And the second account will be Repairs and Maintenance, and this will also be under Cost of Goods Sold as the account type, and we'll use the same detail type, Other Costs of Services, and we're going to make this a sub-account of Cost of Goods Sold, and then Save. You would repeat these same steps for any additional expense accounts that you need for your properties. Now, what do you do when you have expenses that are related to the business, but not to the property? Well, you can set up some additional accounts, such as insurance for business insurance, rent for office rent, staff and management wages, general advertising, and general legal expenses. We're using the word general to differentiate business expenses from property expenses. And these won't be subcategories of cost of goods sold because they're expenses that relate to the business overall. The fourth step is to add expenses. So we'll click on the New button and then Expense. And the first expense that we're going to add is a window that was repaired at 555 Coconut Ave, Unit 1. The vendor was Delta Glass, and the payment date was July 12th. We're going to use the category Repairs and Maintenance, which is a subcategory of Cost of Goods Sold. This was for $375, and we're using a class 555 Coconut Ave. Even though there are two units on the property, we're still using the same class because we want to see how the property is performing as a whole. And then we'll click Save and New. And this next expense is for the house at 777 Peach Boulevard. This was for electricity, and the vendor was PG&E. The payment date was July 19th, and we're using the category Electricity, which is a subcategory of Cost of Goods Sold. This was for $400, and the class is 777 Peach Boulevard. And then we're going to add one more expense, and this is for office space that was rented from Downtown Office Complex. And the payment date was July 1st. We're splitting the $600 rent between the two properties, and we're going to use the category rent. This is not a subcategory of cost of goods sold because this is a business expense, not a property related expense. So we have $300, which we're connecting with 555 Coconut Ave. And then again, the rent, and then $300 is connected with 777 Peach Boulevard, and then we'll save. The fifth step is to run a profit and loss statement by property. So let's head over to reports and then standard reports. And then we'll click on profit and loss, and we're going to change the report period to this month and display columns by classes so we can see the properties, and we'll run the report. So here we can see 3 columns. We have 555 Coconut Ave for the duplex, 777 Peach Boulevard for the house, and then total, so that's for the business performance overall. And here we have the rental income for the duplex, $3,600. We have one property related expense that was for repairs and maintenance for $375. And then for the house, we have rental income of $2,900 and one property related expense for electricity for $400. Now, if we look a little bit further down, here we have expenses, and this is for business related expenses. So the one expense that we have is rent, which was split between the two properties. The sixth step is to analyze each property's profitability. We're going to look at net operating income, which measures the profitability of each property, and that's calculated by subtracting operating expenses from real estate revenue, and that's where cost of goods sold comes in handy because we have all of the operating expenses grouped under COGS. For the profitability of the duplex at 555 Coconut Ave, we're taking the rental income of $3,600 minus our cost of goods sold, which totals $375. So that's our operating expense. And that gives us the profitability of $3,225. And then looking at the house, we have the rental income for $2,900 minus our cost of goods sold total, which is $400. That's the property related expense. And that gives us our profitability of $2,500. Now you'll notice that there's net operating income that's listed on this particular report, but that's taking into account the rent, which is a business related expense, and we only want to look at the property's profitability. So we're going to focus on the gross profit line. So we can see that the duplex is more profitable than the house by $725. Knowing how each property is performing is critical information. A higher net operating income may mean better loan terms or more investment opportunities. A lower net operating income may have you considering raising rent, upgrading a kitchen or bathroom to attract higher paying tenants, or purchasing energy efficient appliances to reduce utility costs. The key is to know your numbers for each property so that you can make informed decisions to ultimately maximize your profit. Thanks for tuning in. Be sure to check out our video about recording income by property. Feel free to leave a comment or question below.